Have you ever thought about buying a house? It's a big decision, and one that comes with a lot of pros and cons. In this video, we show you the reasons why you should never buy a house, namely opportunity costs, expenses, transaction costs, costs for repairs, and equity are the things we're going to talk about. By the end of this video, you'll know all the reasons why buying a house is not always the best option. Reason number 1. The opportunity cost of buying a house. Buying a house comes with certain inherent risk factors. One of these is the opportunity cost of making such an investment. Foregoing other investments, whether long-term savings or otherwise, to purchase a house carries a large risk that those funds could have been put towards better use. Furthermore, the purchase of a house ties you down in one area and denies you the financial freedom to move where your career takes you or if new opportunities arise. Considering this opportunity cost fully when deciding on whether or not to buy a house is essential in order to ensure that your funds are being utilized wisely and that you will have the flexibility in life to do what you want. When considering the purchase of a house, it is important to factor in the opportunity cost of such an investment. Opportunity cost is the loss of potential gain from other alternatives that could have been chosen instead of making the current decision. There are many costs associated with buying a house, including mortgage payments, insurance, maintenance costs, taxes, and closing fees, but all of these pale in comparison to the opportunity cost. Foregoing investments from other sources and putting finances towards purchasing a house carries a huge risk in terms of what those funds could have been used for otherwise. It can be difficult to turn down opportunities that may come along where money could be better placed and yield greater returns than tying up funds into real estate. Sure, investing in property historically has always paid off in the long term, but there are no guarantees and it is important to weigh these risks before committing fully. The purchase of a house also restricts you geographically, as you are invested so heavily into one particular area. This limits your financial freedom to move around where your career may take you, or if new opportunities arise elsewhere that may benefit you better than remaining in your current location. It is vital that this opportunity cost is taken into full consideration when deciding whether or not to buy a house, as it will affect more than just a monetary aspect of your life. It will also heavily alter aspects such as lifestyle mobility and career prospects over time. The opportunity cost must also be weighed against any potential gains from investments made outside of purchasing a home. For instance, investing in stocks or bonds can bring returns on a higher rate than buying a home and help build wealth quicker by providing regular income streams with limited risk involved due to diversification across multiple markets. Other investments may include purchasing gold or foreign currency, which can prove more lucrative than property investment due to their liquidity over real estate assets, which often need market conditions to rise dramatically before profits can be made through sale or rent prices increasing significantly over time. Ultimately, the decision regarding whether or not to invest in real estate requires deep consideration of each individual's financial circumstances, combined with an awareness of potential future trends which could sway them one way or another, depending on their objectives and goals for their money moving forward. Careful research should also be undertaken surrounding local housing markets, as well as understanding how much capital can realistically be put towards such an endeavor, so that any losses incurred through opportunity cost can still be minimized as much as possible, whilst maximizing profits should things go according to plan for those who decide that real estate investment is right for them at this point in time. Reason number 2. The expenses associated with owning a house. Buying a house is no small decision and it can come with a hefty price tag. Homeowners must take into consideration the expenses associated with owning a house, which comes in the form of opportunity costs, transaction costs, costs for repairs needed over time, and equity. As talked about before, opportunity costs may seem invisible, but they should not be overlooked due to the sheer magnitude of potential lost benefits on investments missed out on or even other kinds of purchases. Costs for repairs are an inevitable part of owning a house that should always be taken into account when crunching numbers before making the purchase. All these expenses should be considered when deciding whether or not to buy a house. Reason number 3. The transaction costs of buying and selling a house. Buying and selling a house is not a simple, cheap task. People often overlook the additional financial burden of transaction costs related to purchasing or selling property. Transaction costs involve all the various expenses that come with a real estate transaction. Transaction costs involve all the various expenses that come with a real estate transaction. Both the buyer and seller are responsible for paying various taxes, fees, commissions, and other closing costs. It is important to be aware of these financial burdens before agreeing to buy or sell a home so that one is fully informed about their investment, as transaction costs could take up a significant portion of their budget. The cost for repairs and maintenance on a house can add up quickly, especially if the home is older and has had little maintenance done on it. Depending on the size of the home, repairs could range from minor tasks such as painting or patching drywall to more extensive renovations such as replacing plumbing and electrical systems. Regular maintenance costs may include lawn care, snow removal, gutter cleaning, deck staining, and more. Even small repair jobs can be expensive when you factor in labor costs and high-quality materials needed for a job done right. For instance, replacing a single window pane could cost hundreds of dollars due to labor costs and the price of the glass itself. On top of that are unforeseen expenses like roof leaks or foundation problems that require professional attention. In some cases, homeowners find themselves paying thousands of dollars to keep their house in good condition. It's important to budget for regular maintenance and have money set aside for unexpected repairs in order to save yourself hefty repair bills in the future. Overall, the cost of repairs and maintenance on a house can vary significantly depending on its size and condition. Be sure to factor in regular costs like lawn care as well as emergency expenses when budgeting for your home. Having an emergency fund set aside can help you prepare for unexpected costs and keep your house in good shape for years to come. The equity you build in a house is not liquid. This means it cannot easily or quickly be turned into cash. It is an illiquid asset, which means that it can take longer to convert its value into money. This is because the value of a home depends on multiple factors, such as its location, condition, and market demand, all of which can be difficult to accurately assess and may take time to convert into sales proceeds. For example, you might need to make repairs and upgrades before selling your home in order to meet market standards and fetch a higher price. It also takes time for potential buyers to physically tour the home and make offers, even with the help of a real estate agent who can expedite the process. This could leave homeowners waiting months or longer before they actually receive any cash from their investments. Furthermore, if the buyer needs financing for the purchase, then this could delay closing until after loan approval has been granted by the lender. Despite these obstacles, however, it is possible for homeowners to access some of their equity via methods such as refinancing or taking out a second mortgage. Still though, it often involves additional costs in terms of fees and interest rates that cut into one's total return on investment. In conclusion, there are many reasons why you should never buy a house. The opportunity cost of buying a house is the lost opportunity to invest that money in other ventures such as stocks, real estate investment trusts, or mutual funds. The expenses associated with owning a house include mortgage payments, property taxes and insurance, utility bills, and maintenance costs. The transaction costs of buying and selling a house can be substantial, including agent commissions, closing costs, and staging costs. And finally, the equity you build in your house is not liquid. You can't access it without selling the property. Now we're at the end of this video. If you got value from this video, you'll also like these videos. Thanks for spending time with us.